What is up, everybody? It is Thursday, September 26th. Today, I had a winning day. As you can tell, I have this trade right here. I did try a long trade, which I quickly closed because I saw that it was invalid. And I entered in short and took some profit off here at midnight open, some more at the -2 standard deviation that aligned with the 4-hour fair value gap. And then here my runner got stopped out in profit. Overall, I believe the trade ended up being like a 1-to-5 maybe, or actually a little more. There, it was like a 1-to-3. Regardless, still some solid gain there. So let's get into it. Starting out on the 4-hour time frame, we know that we are extremely bullish. Price is just ramping on up. Of course, we have these kinds of retracements here. We did recently hit this draw on liquidity that I had marked out, these relative equal highs here on the 4-hour chart. So we could have expected some kind of retracement to occur, which we saw happen today. On the 4-hour time frame, I was marking out just really big 4-hour fair value gaps that we could potentially bounce off of. So we obviously have this one, which we invalidated, but it is okay that we did, because we have a 4-hour fair value gap here in discount that is holding us up. So the discount fair value gap weighs more than a premium fair value gap, okay? Because we want to continue moving on higher. We want to see buys and longs in discount. So because this is holding, I am still continuously bullish. This was just profit taking, honestly. And then I believe tomorrow we're going to have more of a move on up, even probably starting overnight. So we'll see what happens there. But, you know, I had that marked out, switched down to the 1-hour time frame. As you can see, since last night, we just had this massive move on up. Look at that, green candles after green candles after green candles. So a lot of resistance on the way down. You notice also we have this 1-hour fair value gap here that is holding us very nicely still. So I do believe we're going to continue moving on up. We get a 1-hour close above this level here of the bottom wick of this candle, we will definitely continue to see higher prices. So one of the things that I was noting was this 1-hour fair value gap right here. If the 9 to 10 o'clock candle closed below it, it would give me some good confirmation to move lower. Now, if that did not happen, I wanted to see if there was anything on the 15-minute time frame, which we saw here was this 15-minute fair value gap as well. I marked out if we got a 15-minute candle close below, we would get some downside, which as you can see here at 10 o'clock to 10:15 on this candle, we did. I actually market ordered in at the next candle, and I'll explain how and why I did that and where I placed my stop. So overall, you know, we had that big move on up. I was expecting some kind of drop and then continuation, but because, you know, it took a while to hit this, it kind of led me to think maybe we're not going to have a continuation on up. We're just going to have a very steep retracement. I did put down a standard deviation. I'm not a big standard deviation guy. I may have done it incorrectly, honestly. I don't really know how to do them, but I kind of use them as a guide. But as you can see, I tried to target the -4 standard deviation here, which we obviously did not get, but we did get some really good take profits there. So that's always good and nice to see. Another thing that I noted was after the run on up in London, we were accumulating overall. We did have news, but that didn't really move the market much. So we had accumulation here, and it looked like manipulation up, and then we started to distribute down, obviously creating a market structure shift here. Price never came back up. It was just a complete sell-off that happened. So like I said, that 15-minute candle close below was my what's it called? My invalidation point of it being bullish. It was going to be short-term bearish. So going on to the 1-minute time frame, let's take a look at the trade that I took. Also, why is my I'm on the wrong chart here. This is the right chart. I was like, why is my name not up there like I usually have it? Okay, so going into the 1-minute time frame. Now I can't even handle this one. Okay, here we go. I pop on the quarterly cycles indicator because, of course, that is what I use to really know what pockets of time I'm going to be taking a trade in. So we did have accumulation for the AM session. We manipulated up, which was a little suspicious to me. So I thought maybe we could see some downside, but I'm still going to continue playing what the market structure shows me. The first trade that I took was here. We got accumulation manipulating down. Because I am bullish, I thought I could potentially take this candle closure above this 1-minute fair value gap. It was sweeping this low right there. Also these relative equal lows as well. So I thought, hey, this is a pretty good place to go long. Price started to move on up, failed to continue this, and then here on this candle itself, I started to see it push very aggressively down. So in the midst of it, I actually closed it, thinking, you know what, we're not going to continue moving on up. And plus, on top of that, we were in the manipulation cycle. I should not be taking trades here. I don't know why I did that. Very eager to make back yesterday's loss, I guess. But I quickly caught myself going against my rules, and so I closed out that trade. Waited to see what Q3 was going to bring, if we were going to end up invalidating maybe something up here. So I would wait to get some kind of retracement and then continuation on up. But as you can see, Q3 did not give us anything. There was no bearish fair value gap. So I waited for the 10 o'clock candle to print and see what that 9 to 10 o'clock was going to look like. We did not get that close below on the 1 hour. And so I waited to see what the 15-minute was going to do. I marked out that 10 o'clock open to see if there was going to be some kind of push on down. And then if we were going to end up reclaiming back above the 10 o'clock open, I was going to see if there was kind of some move on up. Because if you think about it, every hourly candle, every 4-hour candle has a bottom and an upper wick. If you are looking for a green candle, you want to see it move down and then displace back above the open to create that wick. So that was what I was looking for. And here, as you can see, I have this 1 minute fair value gap marked out. Price moves on up into it, does not displace above it, and actually starts to reject off of it. And then at the close of this candle here, okay, the rejection of this 1 minute fair value gap, the close of this candle here caused me to flip bearish. And I said, you know what, I'm going to market order in, and I'm going to put my stop above this high right here, because it is also a very good place to put it since we do have a swing high. This was kind of like a liquidity grab. I could expect this to be a safe high, a protected high, because it swept liquidity there. Let me mark that out for you guys so you can see it. So it swept liquidity there, started to displace lower, respected this 1 minute bearish fair value gap, and then the 15-minute close below this blue zone, which was a 15-minute bullish fair value gap, creating it to become an inversion fair value gap, showing bearish order flow. Okay, 1 minute looked bearish, 15-minute looked bearish. I know the higher time frame looks bullish, but we are expecting some sort of retracement. There are retracements, okay? So with that, I entered in, put my stop above that high, and the first take profit was actually at midnight open, which is right there. You can see this black line is the midnight opening price, so I took some off there. The next area of profit was this -2 standard deviation, which lined up with the 4-hour fair value gap. So that was a good place that we could potentially bounce from. So I had my stop at break even right there. And I held onto some runners, was trailing my stop on major swing highs, so like this, and then price just continued to drop off steep. I kept my stop loss here. Then price came up, created this, boom, rejected this bearish fair value gap. So I moved my stop to here. And as you can see, I ended up getting stopped out because I had it a little bit above that. So I ended up getting stopped out over here on my runners. Unfortunately, not hitting my full take profit, but still in profit. So that is totally okay by me. I am not upset about that. I did make a very nice gain on this. The trade ended up becoming like a 1 to 3 risk to reward, I believe, somewhere around there, but at least it was a 1 to 2. So now this was just on one account. I did take other entries on my other accounts. So re-entries, where would I have taken those? Here, you can see this right here. I got in on the inversion of this bullish fair value gap. Why? Overall, we're bearish. We're still bearish and we're trying to reach for lower prices down into discount, okay? I figured if we ended up getting a tap back into this and respected it, we were going to end up moving down. I mean, look, we disrespected this bullish fair value gap, created another one right there and disrespected it too. So entering here, stop above there, or entering here, stop above there, and again, targeting the 15-minute fair value gap that was here, or the low of the 15-minute fair value gap to fill it, still constituted as a great trade. Now, this one ended up becoming a 1 to 3, but let's take a look at what this one would have been. Like, let's say you did it here, and I don't remember how much it ended up being, but if you targeted that right there, it was also a 1 to 3, okay? Maybe you missed all of this, but you can still end up getting a nice continuation. If price has yet to hit the draw on liquidity, you can take a continuation play. Okay, because price will retrace, and you know that the higher time frame, the 15 minute for example, is showing bearish order flow, and on the 1 hour and the 4 hour, we are just retracing on a bullish structure. Why not take a continuation? You would expect to see bullish fair value gaps start to get disrespected when they are created. Here's one, disrespected, enter in. You could take the entry on the retest, stop above that latest swing high that created that inversion, and target areas of liquidity. It's really that simple. It doesn't have to be so complex. If you took a long trade here and it stopped you out, pause and think, what's going on? Take a look on the 15 minute. Were there any inversion fair value gaps get created? Yeah, this one. Oh shoot, maybe I should be targeting lows. What lows should I target? You can target session lows. So like the Asian session low from last night, could have targeted that. Could have targeted the 50% of this session right here of the PM on Wednesday. Did we end up hitting that? I have no idea. I don't see it, but we ended up creating this 15-minute fair value gap in it, and that got filled. You could have targeted the top of that too. So don't make it so complex. It's really not that difficult. Understand the structure and the context of where we are within that structure, and then frame your next trade around it. Like I said, if you didn't catch this one, or if you took a long, you could have caught this one, made your money back. Easy. Follow the trend. Don't try to beat it, okay? So hopefully you guys ended up green today. It was a great, solid day trading. And yeah, we'll see what tomorrow brings. Hopefully we end up with the week green. It's been really tough. Monday sucked. Yesterday was a little difficult. But today and Tuesday were good days. So we'll see if we end up the week green. All right, guys. God bless. See you all tomorrow. Peace.